we run on a system that doesn't even use money. It uses currency, credit, and basically a monopoly by a few elitists that basically have huge control in almost all aspects of our lives based on the belief system that we have to have that stuff to be able to live.
Welcome to Liberty and Finance and Reluctant Preppers. We have a returning guest you're sure to recognize. David Morgan, the founder of themorganreport.com and also known as the Silver Guru, joins us this Friday, July 24th, 2020. David, thanks for coming back on.
It's always great to be with you, and I know it's going to be almost all Q&As. I'd just like to start with a couple of things. First is that, as we all know, and I think one of the first interviews I did after silver hit this over 5,000 year gold-silver ratio has never been seen before, which it took 125 ounces of silver to buy an ounce of gold. Those always portend huge economic problems down the road, which, of course, we've been in one for quite some time. It's just getting worse and worse with COVID-19 and a lot of other factors. And it also portends the advent of a major move in the silver market. So it still remains to be determined whether those two things hold, but certainly the indicators are there, and I would say that both are a pretty sure bet at this point. So I know we want to get right into the questions. We have quite a few, and it'll probably lead to further commentary by yours truly. So thanks for having me back.
Sure. We're always glad to have you, and it's been a very eventful week, and as silver has finally started moving after taking its sweet time, as gold had been moving for months and months, and silver somewhat, but now just recently just making very vigorous moves over the weekend. One of the things that I've noticed as a bullion rep for Miles Franklin is that our availability of product, which had gotten much better in June after having a horrific March and April with a huge spike in demand we had when the markets were roiling and crashing and COVID lockdown and all that sort of thing, things kind of quieted down in June. We started to have the delays went away. We had availability of immediate shipping in stock of American Silver Eagles, Canadian Silver Maples, that sort of thing. And premiums were starting to drift down. They had been quite high on some of those products, and were coming down to maybe a third less than they had been at their peak. And then just over this last weekend, all of a sudden, clients who I was working with on Friday that said, yeah, maybe I'll make my decision now, or maybe I'll wait till early next week. By Monday night, we were back ordered on shipping delays back on both Silver Eagles and Maples, and also premiums starting to go up again. So I was just wondering if you could talk to us a little bit about the factors in the spot market pricing and also the premium pricing, how those things can swing once you start getting this demand imbalance and that volatility spiking.
Sure. Well, there's always a bid-ask spread. I mean, every dealer out there has to make a profit or they wouldn't have a business. So that's normal business activity, anything, even in a stock market or a housing market or automobiles, whatever you buy. Even if you buy a loaf of bread in the store, there's a margin that's made for the store. And there's several before the bread hits the shelf. But so I think everyone gets that basic concept. So when there's a supply shortage or tightness, then the spread widens. It widens in all areas. It widens not only in the retail market where you physically are buying the metal. For example, the mint itself for the U.S. Eagles increased their margins to what they gave the main dealers. And there are very few people that can buy directly from the mint. And those that do buy from the mint, then those wholesalers sell them off into the retail market, and the retailer has to make a profit. So they mark them up further so they can stay in business when they sell them. So that's part of it. Also, during the volatility, then it costs more to hedge. So the spread in the futures markets and the options market or the hedging facilities that are available also have a wider spread because of the volatility in the market. So it's typical of any market where the volatility increases, the bid-ask spread increases. So there is some, I wouldn't say gouging at all. There's some dealers that may, move the margins up a little higher than they would under more normal conditions because the demand is there. But for the most part, it has to do with the volatility and the market itself. So the one way around it really is to buy, raw silver or commercial bars. But that's really only, and that's how silver's price is determined, by the way. I think everyone that listens to this show knows that. But there's some people that are new that think that the spot price of silver is what you can buy a silver coin at, and nothing could be further from the truth. So I won't even go into that. I think that's basic. But anyway, if it's not basic to you, you can look it up, why it costs to take that bar, smelt it down, extrude it, stamp it, transport it. There's a lot involved to take a raw block of silver and turn it into a 1 ounce, medallion or 1 ounce coin or 10-ounce bar or whatever. So there's a processing cost, transportation cost, labor cost, energy cost, all associated with making that retail product.
I was attending this morning at the Sprott Natural Resources Symposium. I've been one of the members in the Miles Franklin booth there, and there was a discussion we were having today talking about that there's no bull market like a gold bull market, because a lot of bull markets and other things like stocks or whatever are fueled often by greed, by speculation, people hoping to make a gain. But often a spike in gold markets specifically seems to signify people's uncertainty and fear of the financial system, concern about instability, that sort of thing. So the higher it goes, people are clinging ever more tightly to being reluctant to sell. This is the average mindset, average psychology, not real contrarian investors like yourself or whatever. But the question is, in silver, for people who are seeing now a rise in silver prices and are already holders of physical silver but want to find some ways to take advantage of that without necessarily giving up their holdings, we have a question here from Dean Beachy who says, I'm looking for creative ways to pull cash from my silver without losing ounces and the pros and cons, for example, leasing or borrowing against. So any thoughts for strategies to get some current cash without taking a hit on your silver stack?
Yes, there are several. In fact, probably the best thing I can do, and it's $20 to me. And believe me, I don't need $20. But if you just go to our website, themarketreport.com, and look at the book section, pull down that menu and buy Second Chance. It goes through several of those that will be much easier for you just to read and study and understand than for me to try to explain it.
We've got a question here from Anon Who Cares. It says, why is it I never hear about acquiring scrap sterling? I've heard you mention it once before, used in Argentina, I believe, as barter. I hear people talk about junk silver for use as a Mad Max hedge, but junk silver screams you collect silver coins, whereas a fork or a chain or some earrings might keep some lower profile.
Yeah, well, I think he's right. I think that's more apropos to the South American countries than it would be in the United States, Canada, or Europe. But, first of all, if you're really savvy about the silver market, you know what sterling is 92.5% fine, not 999 fine, and you can buy it at a discount or par or whatever. It's silver, even if it's in a form of a fork or a knife. So anyone that, again, is savvy to the market, but it would be harder, I think, in the U.S., not necessarily in South America, to barter with a knife rather than a coin. But, that's my take. You might have a different one. It's not a right or wrong kind of a, discussion. If you're happy doing sterling, do it.
This question has come up multiple times. You've been in the past promoting a crypto project that also is backed by physical metal and people can make deposits into it and that kind of stuff. Bill Disher says, David, can you explain the LODE project, LODE? It sounds interesting, but I'm not clear as to how you'll be able to transact using your invested silver. Will they issue a debit card that will be applied to your balance of silver holdings?
Yeah, it's an excellent question. I'd love to do it. It'd probably take a long time to go through it all. And I'm probably not the best one to explain it. So the best thing to do is to go to the website ag.lode.one. That's a URL. It doesn't have to be .com or .net anymore. It's ag, the symbol for silver, .lode.one, and watch a couple of videos. It's pretty well explained. And then you can get on a chat board with a lot of people that are on there discussing the whole project. Further, there will be some more interviews that are about the whole project. And I think Load might have already put one or two out, but on the website, you'll get a lot of information. On
All
top
right.
of that, addressing the specifics of a debit card, not yet, but it is peer-to-peer. It can move to Syscoin. I've already made my first transaction. I sold a couple of my Silver Manifesto books to a member of mine in the UK, and he's on the Load platform. So instead of going through the currency exchange and blah 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 to do it, we just made a deal on AGX, which is the token side of the Load project, and I sold him my books for silver. So it's pretty cool.
Interesting. We've got a couple of overlapping questions here from about the topic of hyperinflation or not. And it's very interesting because some of the experts and analysts we've talked to recently were talking about deflation. I think it was Jim Rickards talking about deflation ahead. It's like, really? Because I guess that's partly what happens when you have this just completely crashing of economic activity and that kind of thing. But Brad Holloway asks, is there any avoiding hyperinflation at this point? I don't see anything less than stimulus, UBI, MMT, whatever you want to name it going forward. I would think that there would, even if jobs were to go back up, what would be the incentive? I see causing a real supply side shortage leading to hyperinflation. Similarly, Stephen McSweeney says, is there any chance in this current political and economic climate of hyperinflation not happening?
Yeah, that's a good question, and I'll try to be succinct. It takes a little bit of time to go through it, but first of all, as an Austrian, and the fact that whenever you increase the money supply, that dilutes all the remaining currency that already exists, and that's inflationary by definition. But we want to put that definition on hold for a minute because what really matters is not. So let's explore that a little bit. So if we issue, an additional 4 trillion here, like we did recently, and the number keeps changing and increasing, but if that money just goes to your bank vault and you lock it in the vault, it doesn't mean anything. It's increased the supply, but it isn't being used. So let's double it. They just put in $8 trillion, and everyone looks at, oh my God, it's hyperinflation. Look at it. They're increasing the money supply. Nope. What really matters is the velocity of money. When that money starts moving into something, that's when you start to get inflation. It's the turnover of money. But if it's just sitting there, it does no good whatsoever. I mean, if you inherited a windfall from your family, your grandmother passes on, she gives you $1 million, but she locks it in the vault and says you can't have it until you're 10 years older. It's basically worthless to you for those 10 years. You can't do anything with it. So I hope I make my point clear. It's the velocity of money. It's not until you get that money out of the safe and you go buy the car and the boat and the new house and take the girlfriend out and all that it's moving. It's going through the economy. So that's number one. So you could print until infinity, and unless that money is being used, it means little, actually. The other part is what are the deflationary forces. Whenever you have a failure in a corporation, all those bonds are worthless. Well, they become so. Whenever a corporation goes bankrupt, totally bankrupt, not a reorganization bankruptcy, but a total bankruptcy, that business no longer exists. So all the equity holders are, excuse me, I'm trying to get rid of that sound. Anyway, all the equity holders, their stock becomes worthless. And the bondholders get whatever hard assets are left and divided amongst them on a pro rata basis. And of course, you're usually getting 10 cents on the dollar. So that's highly deflationary. So if you've got corporations going bankrupt and failing left or right, even while you're printing a ton of money, but corps are failing, so you've got a force that's not utilized yet because the velocity isn't there. And then you've got bankruptcy, so that's a potential inflation with a huge deflationary force. And then, of course, the bond market's the king of kings. It's the biggest market out there, the debt credit markets. And when you have failures in the bond market or less acceptance of the, let's say, the Treasury market, the U.S. Treasury market, or any sovereign nation, then interest rates are actually forced higher. And as interest rates are forced higher, then bond prices go down or decrease. And that is also deflationary. So really what we're going to have is stagflation. You're going to have increasing prices for everything that you need. You're going to have increasing prices for the safe haven assets, which are basically gold and silver. And then you'll have decreasing prices for almost anything that's based on a loan, such as a mortgage. So that takes real estate across the all commercial real estate, all residential real estate. There'll be some exceptions. Anything in the automobile sector, anything you buy, big ticket items with a loan, credit cards, of course, anything along those lines. So you're going to see a mix. Most economists aren't supposed to say you can have both. That's why they invented the word stagflation in the 70s, because you can't have both. So you're, again, repeating it, important to know. I doubt you'll see hyperinflation. I know how much money's been printed. I know it probably as well as you or anybody asking the question. But that doesn't necessarily equal hyperinflation. It just equals an increase in the money supply. So what you really want to watch is the velocity of money. And you can get that off of St. Louis Fed or the Atlanta Fed or the Fed website itself. Any of them will show you, most of them will show you the velocity of money. And that's when the average American goes to the grocery store, sees food prices are going up and up and up. And they say, you know what, whatever disposable income I have, I'm going to buy another case of tuna. I'm going to buy a year's supply of oatmeal. I'm going to buy whatever now because I know if I go back next month, it's going to cost me 20% more. And once that velocity gets into the consciousness of the general public, no matter where it is, United States or anywhere, then it starts to accelerate. Once that psychology changes and the velocity of money increases, then you're going to see inflation, and only then.
The other thing that I think you might have mentioned in passing, or maybe it's additional to everything you said, is something Danielle DiMartino Booth mentioned, which was the savings rate. When you get that psychological shift on the part of consumers that there's financial turmoil, there's trouble out there, they're not sure they're going to, if they haven't lost their job, they're afraid they might, that kind of thing. They don't want to spend, so they just tend to pull in their horns and save and cut their expenses. So she said the savings rate had jumped up to some huge number from almost
33%,
nothing.
33%, right, if I remember right. And she's right. So that's another part of the stagflation. People get scared. They don't spend their money. And I just said that they will, but I'm talking about my thoughts on the future of food prices. But no, she's correct. So when you have, that's putting more money in the vault that you're not touching. So that decreases velocity, which is happening, which is deflationary. Even though the printing money, remember, it's not how much money's out there, it's how fast it's moving through the economy. If it's not moving through the economy, just think for a moment, do a thought experiment, and prove it to yourself. Just think that for 1 week, nobody spent any money at all. Just zero. The velocity is zero. What happens to economic activity then? Super deflation, so it's pretty easy to prove, but most people don't think it through. And there's a lot of misinformation out there, and there's a lot of armchair economists that are giving out bad information based on the Keynesian model day in and day out. It's inundated through all the major networks, what the Keynesian model is, which is an absolute objective failure. But nonetheless, that's what we're in, and that's why it's one of many reasons it will fail.
You mentioned in the last section where you were talking about inflation and deflation and so on, you mentioned people going into safe haven assets like monetary metals, gold and silver. You didn't mention platinum. What is your take on platinum, its current levels, and whether you consider a monetary metal or not?
Well, it's like the argument of silver money. Platinum and palladium are both classically money because of their properties. They're scarce, they're fungible, they're recognizable and all that, but they really aren't. I mean, they're basically industrial commodities, basically. The problem with platinum is platinum had a pretty good following in Japan for jewelry, other places too, but primarily Japan is a jewelry market, which has basically gone away with the millennials. Millennials aren't interested in platinum at all. And also the industrial side is the catalytic converters, which palladium is used primarily for gas and platinum for diesels. And that market going out, 5 or 10 years, I'll say 10, you're going to see the EV market increase. So you're not going to be using catalytic converters. And you're going to see a huge decrease in the amount of automobiles per capita. I mean, almost everybody in the United States has 2 automobiles per capita right now. It will generally get to 1, and then it'll get to none in a lot of places. And why is that? Because of these auto driving situations where you'll either Uber or you'll have an automobile that you share, or you'll have an auto-driven, automatically driven, robot-controlled means of transportation. Right now, if you study it, the amount of transportation that you use your personal automobile is about 5% of the time. So you drive it to work, and then it sits in the parking lot for 8 hours, and then you drive it home, and it sits in your garage for another 12 hours. Then you get up and repeat the next day during the work week. So what's going to happen is you're going to see a huge decrease in the amount of personal transportation based on ownership, and it'll be primarily on the aggregate moved into like an Uber type situation or a driverless car. So that means a huge decrease in the amount of industrial demand for both palladium and platinum. And that's in the near term, meaning near term for me would be 5 or 10 years because of, the way I think. If you think in terms of days or weeks, it's not. But in terms of months or years, yes. So I'm not very bullish on either of the white metals. I was on palladium, and I made a good trade on it. Didn't inch out as much of a profit as I could have. But I think it's probably hit a ceiling here. The thing that's interesting about palladium is there is a physically driven market. The reason the market stays around 2,000 to 2,200 an ounce U.S. is because it's right at the margin. You got to pay that price to get it to keep the automobile lines going, keep those catalytic converters produced. But once that tapers off, I think you'll see a decrease in the price.
On that topic of the EV future, where we have combustion engines being replaced by electric vehicles, I've been told that once we get to fuel cell powered rather than plug-in rechargeable, then the fuel cells require platinum again. So that'll be interesting to see how that affects things.
Thanks for throwing it out. I'm always a little hesitant to make any long-term statements like that because I learned from Jerome Smith, and very few people even know who that is, but he was sort of the leader of the silver story back in the 70s. And he made a grave error based on not seeing the future, not that any of us can, about technological change in the mining industry. And so his projection for like $200 silver by the mid-90s would have been correct if and only if his presumption was correct, which was the mining of silver was a flat line and had been for like 60 years. But with the advent of a technological change, so I'm always aware of that there could be a technological shift, especially in today's world, that will invalidate a premise that was valid for a long time. I mean, we can talk about mining, which we're going to talk about, and I don't want to, we've already gone probably long enough. But there's going to be some major changes in mining in the next decade as well that you might be able to get situations that are uneconomic today to become economic because of the methodology that's used to extract the minerals.
That's interesting. I did want my next question to be about mining. People are concerned as we see increased government intrusion into our lives through lockdowns and unprecedented policies, many of them unconstitutional on their face, some of them powers being seized by governors or mayors that aren't even within their realm, always with this idea that it's for our own good, that sort of thing. But NTS 43 asks about confiscation. So if we could look at the big picture of confiscation or nationalization of mining operations, he also asks, will metal dealers have to turn over their inventory, and will vaults like Brinks have to turn over their customers' metals? Not that we know, but what are the thoughts about that?
I doubt highly there's anything to worry about on confiscation. I know this topic comes up all the time, and there's people that won't buy metals because it's going to be confiscated. I really doubt it. Even the word confiscation is inaccurate in the 1933 episode. It was nationalized. The government paid you the face value of a gold coin. It was $20 the ounce approximately, $20.67 ounce for those perfectionists out there. And you were given a $20 bill for every one that you owned, and you were asked to turn it in. And then after they collected as much as they could get, then they repriced it. So you're given the fair value, quote unquote, fair value at that exact time. And then after they collected it, then they revalued it. So it wasn't confiscated. You were paid for it. Confiscation means you come in and you take it, you get nothing for it. So I don't think that will happen at all. I don't think they'll nationalize it either. First of all, if they nationalized all the silver out there, what good would it do them? I mean, it's only, $23 an ounce. They'd have to put the price at, $195,000 an ounce to do any good, or maybe, $2 million an ounce. I mean, there's so much debt out there. There's $200 trillion in the financial markets. So for silver to become, 1/10 of that, then the whole silver supply would have to be, 20 trillion, so do the arithmetic on that. So if they were going to confiscate it or, and pay you the going rate, so I'll call it nationalize it, where would you go? You're not going to go to the dealers. You're not going to go to the individuals. Besides, if you took a silver eagle from a U.S. citizen, you'd have a huge lawsuit on your hands because that's legal tender. You can take that and spend it at McDonald's or Walmart or anywhere you want. I mean, I don't think anyone's stupid enough to, take a silver eagle that says $1 on it and spend it for $1, when in the marketplace it's worth, 25, 26, 27, 28. But regardless, it's still legal tender. So back to the mining situation, that's a little bit more of a concern, but I doubt it. It's been done, and every time it's been done, it's been an abject failure. These nation states know that when they take over an oil company, for example, that they're much more inefficient running it themselves than they are by letting the experts run it. It's true in farming as well. Look at what happened in Zimbabwe, where farmers will run off their land and killed in some cases, and then they get that farm, and they don't even know how to farm it. So it could happen. There's certainly going to be a lot of deglobalization, even though the globalists want it. You're going to see more and more decentralization. You're going to see more, participation on a local level, which means more in your community, more on a state level than a national level. So I don't worry too much about it, but I will say if you're going to grab it, you grab the big stuff. If you're going to rob the jewelry store, you're not going to get the little watches that are worth much. I'm not talking about the expensive watches. You're going to get the most expensive stuff in the jewelry store, and you're going to book out of there. So using that analogy, you'd go for like the SLV or the big places that have a massive amount of silver or gold. That's what you do. But again, I just don't worry about it. I think it's an extremely remote possibility, but I can't rule it out. So I'm glad he asked the question.
We have time for just one follow-up, and that's just always want to look to you for words of sort of a perspective, philosophy that you are using to get through these times with your sanity and, I guess, common sense intact, because we're certainly in some upside-down times, whether you want to talk about negative interest rates or trillions in stimulus or lockdowns for spurious reasons or that sort of thing. What's something that you're turning to as kind of a bellwether to get you through the volatile times that we're traveling through?
Well, let's just talk to me about someone I really admire, and it's consider the source. So when you're looking at the mainstream news, consider the source. Consider if that source is always accurate. Consider how much the mainstream tells you the truth. So I think you should consider the source, whether you're getting data on the precious metals markets, whether you're getting data on the pandemic, whether you're getting data on anything. Consider the source. Most cases, there's an objective. Sometimes there's an agenda behind the information, and many times it's propaganda. So take time to think. The basis of all learning is to question everything. To repeat back is rote learning. A parrot can learn, what to repeat back. So a true human being, a real, academic, intellect, whatever, is someone that questions everything and explores it deeply. So the first thing to consider is the source. Is the source unbiased or not? Is there an agenda behind it? What would that agenda be? And of course, one that everybody knows is follow the money. And of course, we run on a system that doesn't even use money. It uses currency, credit, and basically a monopoly by a few elitists that basically have a huge control in almost all aspects of our lives based on the belief system that we have to have that stuff to be able to live. And in a practical way, most of us do. But really, you can go back in history and find that you can have systems that don't even utilize money that prosper. So there's a lot to consider, but that came to my mind immediately, so it may be a bit offbeat, but I think it is more pertinent to the holistic picture of everything that we're facing today, that you could consider the source. Why are certain messages pounded out over and over and over again and repetitive, and yet very little is done in the free press to look at those let's say, counter arguments or other side of the coin. They're being stamped out left, right, and center only because there is an agenda behind almost everything we see from the main sources that we're all familiar with.
Well, David, thank you for joining us. We've been speaking with David Morgan, the silver guru and founder of themorganreport.com. We had the pleasure of interviewing David Smith, your senior analyst at the Morgan Report, yesterday at the conference. He came into our booth. He planned on spending originally 20 to 30 minutes. He ended up staying almost 3 hours. We ended up having an impromptu panel discussion by the time we got several other interviewees in there. And David spoke very powerfully about the importance of working with integrity, being environmentally responsible, but also responsible economically for the good of people. And it was quite inspiring. You and he must have a lot in common in terms of some of the core values that you share, and it showed through. It was a pleasure to meet him in that way yesterday. Very good.
Yeah, can't say enough good about David, and it's been a real honor for me to have the staff that I do. I've really been blessed in that way, and I'm very grateful for it.
Well, thank you, David, for joining us this time again on Liberty and Finance and Reluctant Preppers.
Well, thank you.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.